Hey everyone, welcome to this week's market update. Last week was quite dynamic. We had quite significant announcements from the Fed and also the CPI data came out. So we're going to look into this. We're going to look into the FUD surrounding Binance and if there's actually some risks out there. I'm going to show you a couple of dashboards so that you can also review yourself and track what's going on with Binance. So let's jump in and let's start with the rate hike. The Fed announced another rate hike. It was 50 basis points. And here in this little graph, you can see all the hikes that there were this year. And we had pretty much 7 rate hikes. And this kind of gives me a little bit more confidence that we're more towards the end of the rate hiking cycle. Currently, the federal fund rate is around 4.5% and maybe they get to around 5%. We're gonna see. But the major question is if something will break before the Fed stops hiking. There's still a lot of unknowns on the economic side. The profitability of companies have been falling and it will be very interesting to track this and to see if we're gonna have a deeper recession into 2023 or we're closer to the bottom. Also, the CPI numbers came out and you can see this graph here shows you the last 20 years of CPI data. And obviously you can see here the huge spike, the top of which was in June, 9.1% of CPI. And last month we reported 7.1% CPI, which was lower than what was expected. And it seems like we're kind of getting back to normal levels. We're still far away from the 2 or 3% inflation rate that we've had most through the last 10 or 20 years. This is definitely a good sign, and I believe that this trend will continue downwards. However, even the better than expected CPI data and the expected rate hike wasn't enough to push equities higher. Actually, we had quite an ugly fake out here on the S&P, and you see that we're still under this trend line, and this is quite an ugly weekly candle with around 2% down on the close. So the question remains, are we going to bottom somewhere around this area, or we're going to see another leg down and potentially another lower low here? Bitcoin and crypto in general have also followed the S&P last week pretty closely actually. And if we look at the weekly, you see again a very ugly candle which retested this level that turned into resistance after the FTX dump. And we have this very ugly looking candle on the close with around 2% down on the week. However, this is very typical for a bear market. And as long as we keep the structure here and we keep this current low of around 15.5K, I think there's a lot of place for chop here, and definitely I don't think it's a terrible idea to DCA into this area. I know I have already started DCAing, and probably coming next week, or maybe I'll wait for the end of the year, I'll add a little bit more to my DCA position, because if we jump into the daily here, we're also at a key level that we're currently bouncing off this area around 16.5K. And if we hold this, I'm going to be adding a little bit more to my DCA. If we break down lower, I will keep adding. And even if we break this lower low currently, and we hit to the major levels that we have discussed in previous market updates around 14K, around 12K, around 10K, I would just be adding more to my positions because keep in mind, these DCAing here is just a very small amount, and I would just keep doing this for the continuation of the bear market. And if we get another washout and another capitulation, I'm definitely going to be adding more because imagine that we might be here. So let's just go back to the previous cycle. If you compare this, we could be somewhere around here, which I do believe personally that we're somewhere around in this area. And currently, if we hold a higher low like we had here, although this was quite volatile, you see that after some time price started just climbing slightly upwards and we never had another lower low. So we might be somewhere in this area of volatility right after the dump for a few weeks. But obviously if something happens in the general economy, we still might get another dump. So we also potentially might be somewhere around here and we are due for a final capitulation. Of course, all of this I think will depend on the general legacy markets, and if we get a black swan or something that really triggers a deeper recession. But if we pull back and if we don't look at the chart day by day or a week by week, even buying at these levels turns out to be a really good investment. And that is actually my thesis for the levels that we currently are in. And if you're not a really active trader, buying anything in this area long term, I think is still good entry points. Of course, if you don't YOLO all in your money and your savings into these levels, don't invest more than what you can lose. And if we jump into Ethereum, you're gonna see exactly the same pattern here. We tested this level around 1400, which also coincides with this major descending trend line. We still have a higher low structure here, and Ethereum still looks a little bit more bullish than Bitcoin in my opinion. But again, this range could get really choppy and could get a lot of time to play out overall. But still, I don't think it's terrible levels to start buying some Ethereum, especially long term. I'm really bullish on Ethereum and on everything that's going on, including NFTs, all the layer 2 solutions that are in development or have already launched, and especially with the merge and the potential for Ethereum to get deflationary. I am really bullish, and definitely I'll be DCAing also in Ethereum equal portions actually compared to Bitcoin. If in previous cycles I was more skeptical about Ethereum and I was buying a little bit more Bitcoin when I was DCAing in the bear market, this time around I'll definitely go 50-50 when it goes to buying Ethereum and Bitcoin. I'm not gonna look into any alt charts because nothing major has happened there pretty much. We're still chopping around, and obviously we're still waiting for the macro environment to play out. But I do want to discuss Binance and everything that's going on there. First of all, there's a couple of dashboards here on CryptoQuant, and if you register, actually these are free and you don't have to have a paid subscription to be able to open this. And these are a couple, if you click on dashboards and on trending, you'll see these couple of Binance proof of reserve dashboards that if you click have quite similar information, but also a little bit different. So I want to show you both. And actually this is on-chain data, and it will be able to tell you, and actually it will help you make your own judgment, because no matter whoever says whatever, even myself or anyone else that you hear expressing opinions, I think it's worth going on-chain, and that's one of the best features of crypto in general, and do your analysis on your own and pretty much make your own conclusions. So let's jump into the dashboards, and I will show you what I personally see. And then of course, if you have any additional questions, we can discuss them in the comments. So here, first of all, you can see exchange reserves on Binance for Bitcoin. And if we click on the all available data, which goes back to January of 2020, you see that steadily the reserves, the blue line here is the reserve. Maybe I can zoom this a little bit. The blue line here are the Bitcoin reserves, and they have been steadily climbing through those years. And actually you can see here a big push, which was actually announced by Binance with their reserve fund. And now after the FUD and after all the news articles that came out that there has been some problem with the collateralization and that maybe Binance is heading out for something bad, if you see the graphs, you'll see that actually the levels of Bitcoin in their reserves are quite okay. Even I would say they're not even lower than right after the FTX dump right here. And if we go to Ethereum and do exactly the same, you see the same pattern developing here. Okay, we're a little bit lower, but still I don't think these are any critical levels that we should be really concerned about. Same thing goes with altcoins. Still we see this falling significantly, but not at levels where I personally would be really concerned about Binance. And in the past few days, here on this graph, you can see the net flow of Binance. After the announcement of the article, here there was a big exchange outflow and a lot of people were started withdrawing their money. But as you can see, in the last couple of days, there have been barely more outflows than inflows. And if we look into the net flow for all stable coins on Binance, you'll see here again that this trend is decreasing, and it seems like the FUD is a little bit subsided already. And if we go to the other dashboard that I wanted to show you, here the proof of reserve, There's actually some explanations here. You can dive into them deeper. I'll leave this dashboard and the other one in the description, so you'll be able to log in and read it through yourself. But here you'll be able to see a little bit more information about their reserves. And actually, this is where all the FUD started. The customer liability report balance claimed that Binance is collateralized like 97%, which was not 101% what Binance claimed. So this is not a huge issue in my opinion. 97% is still pretty good. And it will take a lot of people, because remember that Binance is the biggest exchange out there. It will take a lot of people and a lot of withdrawals to make Binance sweat. And I don't really think we're at that level yet. I still withdrew some funds from Binance. I decreased my level of exposure to the exchange, but not all of them. So in these market conditions, I'm not completely excluding Binance going down. But again, I think the probability is quite lower. And if Binance goes down, actually, I think we'll have a much bigger problem than saving our assets there, because the whole crypto industry will be in big trouble if the biggest exchange collapses right after the second biggest exchange collapses. My personal speculation is that a lot of this is triggered by people of SBF, and they're trying to hit the reputation of Binance like a vendetta, but that's just my personal theory. It sounds like it reading into the articles, but again, I'm not expert on the subject and I really don't know what's happening behind the scenes. We can just look at this data and make our own judgments. And something that I wanted to show you in this dashboard specifically is if we go to the bottom, you'll be able to see the BUSD total supply of Binance. And here, let me just find it. Okay, it also shows you different exchanges and pretty much how much percentage of their assets is in their own tokens. For KuCoin, this is KCS, and for Binance obviously is BNB. So if we scroll down, you'll be able to see that, for example, KuCoin has clean reserve. This means reserve without their own token is around 81%, which in my opinion is not a great number and definitely should be more on the higher side. But Binance here has 89%. So this means that 11% of their assets is pretty much BNB, which for me is not really worrying. It's still, this means imagine how many people need to withdraw their money, and imagine how bad the price of BNB has to get in combination of those factors for Binance to really collapse. So I'm not sure that this is also a concern, but definitely I would like to see something more like Crypto.com, where they have almost 97% clean reserve. This means without their own token again. One more thing that people kind of are forgetting, and it was really the rave of the news in the past month or so, is the bankruptcy of Genesis and what might actually happen with GBTC and its digital currency group, the owner of GBTC Fund. We still have a massive discount on GBTC, and we still don't have any news what's going on behind the scenes with Genesis. So I think definitely this is worth tracking and worth keeping in mind, because I still think this might be a major risk, and it might be the black swan that brings us even lower. And I wanted to put out a reminder out there because people tend to forget. If I may use an example from Nassim Taleb book, The Black Swan, if you play a Russian roulette with quite a big pistol that has let's say 1,000 or 10,000 or 5,000 chambers, and you have only one bullet, at some point you might forget that there's a bullet out there and you might completely disregard it as a risk. However, the bullet is still there, and although the chances of it blowing your brains out is significantly low compared to a normal pistol, it still exists there. So make sure we don't forget about this, and always make sure your funds are protected. And as I mentioned earlier in the video, don't have more exposure in crypto right now than what you're ready to lose and to go to completely zero. That's everything for the update, and if you have any further questions, you know how to find me.